Hello and welcome to Edison TV. Today I'm joined by Mark Boggett, CEO of Seraphim Space, the investment manager of Seraphim Space Investment Trust, an investment company offering a unique opportunity to access tomorrow's potential space tech winners, covering operators of satellite constellations, data platforms, and providers of in-space services, among others. Mark, thanks for joining us today.
Thank you for having me.
The latest test launch of SpaceX's Starship made the headlines recently, and Elon Musk said that he was hopeful that another launch could happen within a few months. So maybe you can start by discussing the significance of a potential successful development of Starship for the space tech industry.
Sure. So Starship is SpaceX's next generation launch vehicle. But before we talk too much about Starship, I think it's just worth spending a minute more generally on SpaceX. So their Falcon 9 rocket has revolutionized the launch market, driving costs down from $83,000 a kilo to $1,000 today. And that's opened up space to a whole new level of commercialization that's enabling thousands of satellites to be launched. So behind SpaceX, there are at least a further 150 other rocket launch companies, and they're all using 3D printed components, reusability in their attempt to drive down cost. So not to be left behind, SpaceX has developed a new rocket, and this rocket is the largest the world has ever seen. It's called the Starship. So this is a fully reusable rocket. It's 400 feet tall, and it's capable of delivering 150 tons into orbit. So now to answer your question, so this vehicle promises to herald in a new era of low-cost access to space. It's going to meaningfully reduce the cost of accessing space from where it is today, with SpaceX drawing upon that leadership. They're going to be able to accelerate commercialization as a consequence of that, because each time the cost of sending a kilo into space continues to fall, it allows more business cases to close for space-based activity. So Starship is the vehicle to access the moon regularly and beyond to Mars. But from our perspective, it's really going to be a volume vehicle to take much more into space at a lower cost than ever before. So they've had their first test, which the market has eagerly been awaiting. Starship took off with cheers from a huge audience. It flew for a few minutes. It actually reached max Q. It soared to an altitude of 39 kilometers, and then it exploded. So it's a disappointment that it didn't make it into orbit. 3 of its engines failed, but this was a test flight, and these rockets have a tendency to not work properly. SpaceX has got a great track record of working through these issues and then making very reliable rockets. So there are 2 other Starships that are in production, ready to launch for further tests. And as you said, it's going to be about 8 weeks before the next test. So the whole market is really excited to see this development, because it really does herald a new era for even lower cost access to space.
Fingers crossed. And can you please also discuss the key long-term secular drivers of demand for the space tech sector?
Yeah, so we've been talking a lot about the cost of accessing space. So satellites are now also smaller, lighter, cheaper. So satellite constellations are now measured in hundreds of satellites or even thousands of satellites. And what that's doing collectively is it's building a digital infrastructure in space. So these satellites are providing ubiquitous communications and just a tsunami of data capability. So we're able to measure every inch of the planet in high resolution, low cost, and importantly, because of the numbers of satellites involved, close to real time. So what this does is it allows us to better monitor our planet, audit what's going on. It allows us to be able to use resources more efficiently, and it also, importantly, allows us to be able to identify and catch bad actors that are doing bad things that are negative to our planet. So I just wanted to set the context there of this digital infrastructure, the tsunami of data, and the new level of connectivity. So there are 2 secular drivers that are really underpinning growth in the market. One is defense and the other one is climate. So both of these areas have immediate requirements. They've got large budgets and positive government support. So just to take defense first of all. So due to the Ukraine and to the general geopolitical instability with China and elsewhere, defense budgets around the world are at record highs. And because of this new capability that's available low cost commercially from space, a significant proportion of those budgets is being targeted at space capability. And then we turn to climate. So from space, being able to measure what's going on from a climate perspective, help us use resources more efficiently, help us catch the bad actors that are chopping down rainforests, dumping effluent into rivers. So there are trillions of dollars in climate-related funds that are looking for these kinds of solutions that space has many of the answers to. The government is very much driving the agenda here. So these are the two big trends that are really driving the space opportunity at the moment.
Thank you. This all sounds very exciting. So maybe you can tell us how Seraphim Space Investment Trust is positioned to benefit from these trends.
Absolutely. Well, virtually all of our portfolio companies are addressing these two trends, and often with a single company actually addressing both climate-related customers and defense-related customers. So let's take an example of ISI, which is our largest investment. It's about 20% of NAV. So what ISI do is they are the world's largest radar satellite constellation. And what a radar in space allows you to be able to do is look down at the ground in very high resolution and to be able to understand what's going on. Now, importantly, they're able to, through the radar capability, they're able to look through clouds, and they're also able to operate at night. So that provides for 24/7 capability of understanding on what's happened on that square meter of Earth every hour. And using algorithms and AI, you can understand how that square meter of Earth has changed over time. What happened there an hour ago, a day ago, a week ago, a month ago. So this is a very powerful data set, particularly when married with AI capability. And then it's applied to many different use cases. But you can understand how defense is using this kind of capability. So the Ukraine is commercially accessing this capability, that it's enabling them to be able to really understand what's happening within their territory in real time. They're able to use that for their defense capability, but they're also using it for their humanitarian efforts and ensuring that people are kept safe. And then ultimately, it can also be used as an audit for some of the war crimes that have gone on, because these things are being studied. And there is now an auditable evidence of these things. So that's how it's being applied into defense. And then in climate, and climate is a rapidly growing customer base of ISI, all the insurance companies are reeling with the effects of climate-induced extreme weather events, the fires, the floods, the tornadoes. So they're able to use this radar data set to help them. So let me give an example around flooding. So an area floods, and using the satellite data, you're able to understand the extent of the flood, where got flooded, what were the depths of that floodwater, what speed was that floodwater traveling at, and importantly, what assets were impaired by that flood. So this actually performs a source of truth that the insurance companies can then use within their own process to help them with claims. So it reduces a significant element of their cost base of actually sending people out into the field, because they know with confidence that that particular building was subject to 2 meters of water on for these particular 2-week period, and that enables them just to be able to use that as a source of truth and pay out on that claim. It also enables them to be able to eliminate fraud. You know, that particular building wasn't in the area that was affected, and therefore you know, they can limit that. So this is a very, very significant game-changing data source for industries like the insurance industry. So just to take a step back, virtually all of our companies are addressing climate and defence. So that is that's in excess of 80% of the revenues that relate to our portfolio companies are from those two different areas. And these areas, climate and defence, are really are not being as impacted by the macroeconomic environment as other sectors. And we reported in our last results, we talked about our top 10 companies. The top 10 companies account for 70% of NAV, and then with 20% of cash, there's 90% of NAV effectively accounted for. So our top 10 private companies grew in 2022 on average by 53% their revenue. So that was directly as a consequence of these growing budgets in defence and the growing need to address these climate-related issues.
Thank you. Now, the fund is currently traded at a wide discount to NAV. So maybe you can tell us how confident are you in your portfolio valuations?
So let me break that down into 3 points. So first of all, the discount to NAV is consistent with our peer group. So that is other investment trusts that invest into private companies. So that means that Seraphim is not being singled out as an underperforming manager. And it also means that the market has not sort of turned against space. This is a market sentiment issue. So it gives me confidence that it will be that these discounts will be narrowed, and in the foreseeable future, when market sentiment returns. So point number 2 is that the market has witnessed very significant valuation reductions in listed companies, the technology companies. Their valuations have fallen very significantly. So the market has also witnessed that private companies in trusts like ours have not been subject to those same types of levels of discount to valuation. And given that private companies are valued quarterly in arrears, there seems to be some general belief in the market that there is bad news coming that's stored up in our valuations and that will appear at some point in the future because of this delayed reporting. But that really isn't the case. So thirdly, and this is probably the most important one, is that there is a lack of understanding of the investment structures that we put into place in order to provide downside protection for our portfolio companies. So we use, and this is common across the venture industry, we use 2 different types of measures when we are structuring all of our investments. We use a preference share structure, and we also use anti-dilution rights. I won't go into the details of exactly what they are, but they limit our downside in volatile markets. So what we reported in our last quarterly update was we tried to help the market understand how this structuring limits the effect on valuation reduction. So I'll just talk through just at a headline level what that actually means. So what we did was we provided an analysis of our top 10 private companies and their performance over the last 6 months. And of those companies, 4 of those companies at the enterprise level, actually the enterprise fell by 25% or more in 4 companies. And then we had only 2 companies that were marginally up over the period, and the other companies were just flat. So with 4 companies over 25% down, the average across all of those companies was 15% down at the enterprise level over the period. Now, our fair value, which takes into account our structuring and the impact of the preference shares and our anti-dilution rights, even though these companies were down by 15% at the enterprise valuation, at the fair value valuation, they were only down by 3%. And this shows how the structure that we've put into our investments protects on the downside. And that's one of the things that the market is really struggling with, because if it wasn't for this structuring, we would have been reporting our price down by 15%. And this is one of the issues that all of my peers face, and the reason why valuations are continuing to remain robust relative to the prices that have been seen in listed comparables.
Thank you. And finally, can you please summarize the funding status across your major portfolio companies and the cash reserves at your holding level?
Yeah. So I've sort of mentioned this already. So our top 10 companies account for 70%. We've got 20% of NAV in cash. So so overall, that's 90% of the NAV. All of our top 10 companies, apart from one, are funded into 2024. So they are well capitalized. The one company that is in our top 10 that isn't yet funded has an agreed term sheet for the money that they're looking for, and we're confident about that company closing that funding round in the near term. So we're really very satisfied with how our companies are capitalized, and we've also got a reasonable amount of cash to start to support those companies in the future as and when they require more funding. Indeed, we're continuing to make new investments because the portfolio is really very well structured and invested. And hopefully that demonstrates to the market sort of our confidence about how well these companies are performing. You know, going back to the point about these two secular drivers of defence and climate that are really driving those strong revenue growth. This is the reason why the companies have been able to continue to access funding at reasonable valuations, despite the backdrop of the macro environment that we operate in. So we're actually really positive about our portfolio companies, about the outlook for those businesses. But right now is the bottom of the economic cycle. It's the best time to be investing in companies as well. So we're continuing to do that as well.
Mark Boggett, CEO of Seraphim Space, thank you very much for your time.
Thank you.